Good morning, ladies and gentlemen. Welcome to the Satin Creditcare Network Limited Q3 and 9M FY22 earnings conference call. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. H.P. Singh, Chairman and Managing Director of Satin Creditcare Network Limited. Thank you, and over to you, sir.
Thank you. Thank you for taking the time to learn about our Q3 and 9-month FY22 results. I'm hoping you've already gotten our quarterly results and investor presentations. For individuals who haven't seen them, they are available on our website and at stock exchanges. The microfinance sector in India has traversed a very turbulent journey until H1 FY22. However, we are pleased to report that collection efficiency and business has improved dramatically in Q3 FY22 with overall collection efficiency of 97% excluding Assam as compared to 90% in Q2 FY22 and 84% in Q1 FY22. The collection efficiency in top 4 states, which comprises of UP, Bihar, Madhya Pradesh, Punjab, which account for 51.5% of the company's AUM, stood at 99%. This growth in our collection reflects the strength of our underwriting and collection systems as well as the tenacity of our customers' base. There is also a very promising sign in form of reduction of non-paying clients to 3%, which was 4% in the preceding quarter. During the quarter, the company employed a cautious and calibrated approach in disbursing loans to new customers throughout, emphasizing more on disbursing loans to existing customers with regular repayment cycles and healthy credit history. Our average ticket size of MFI lending for the quarter stood at rupees 43,000 since we focused only on repeat customers. Our disbursements for the quarter were at rupees 1,348 crores on a consolidated basis, up 2.5% sequentially from 1,315 crores in Q2 FY22. The consolidated assets under management amounted to rupees 7,218 crores. However, the Omicron strain is supposed to be milder than previous infections, and since most of the employees and borrowers have been vaccinated this time around, we expect stable credit demand and improved ecosystem recovery in the coming quarters, allowing us to focus more on fresh disbursement and get back on the path of growth. The company believes that the worst is behind it and that robust industry demand and rising economic activity will lead to long-term success. In this regard, the company has successfully raised 225 crores by way of allotment of equity shares and fully convertible warrants to the promoter and non-promoter entities in January 2022. We at Satin are really grateful for the opportunity, as this investment will not only help us reach our medium-term objectives but will also accelerate our long-term strategic aspirations, such as strengthening our footprint and driving the company's planned growth across key metrics. These investments also underline the market's belief in Satin, even in these difficult circumstances, that is, it is well positioned to achieve profitable long-term growth without compromising on portfolio quality. This fundraise of rupees 225 crores will boost our strong position in the lending ecosystem and help us retain our firm footing and recuperate in these uncertain times while keeping an eye on opportunities ahead. As on December 2021, the company's balance sheet liquidity remained strong with rupees 1,069 crores in surplus funds and rupees 320 crores in undrawn sanctions. Till date, the company has raised rupees 2,329 crores from various lenders. The CRAR as on December 2021 stood at a strong 24%. We've consistently developed over the years by putting a significant emphasis on customer service. Our technology integrated process, solid domain knowledge, motivated team and visionary leadership are the foundation of Satin. Primary goal is to make a positive difference in the lives of underserved communities while also empowering and transforming the lives of over 28 plus lakh clients. And going ahead using a calculated approach, the organization aims at building a solid portfolio with few delinquencies and expanding its reach in existing and new locations. Now let me give you the financial and operational highlights of the company. Our disbursements for the quarter stood at rupees 1,348 crores as compared to rupees 1,822 crores in Q3 FY21 and rupees 1,315 crores in Q2 FY22, registering a sequential growth of 2.5%. Microfinance disbursement for the quarter stood at rupees 1,224 crores as compared to 1,742 crores in Q3 FY21 and rupees 1,221 crores in Q2 FY22. Continuing a cautious and calibrated approach in disbursement activities, we are gradually inching towards the pre-COVID disbursement level and have majorly disbursed loans to clients with regular repayment cycles and healthy credit history. The company's collection efficiency trend without a SAM for the first 3 quarters of FY22 was as follows: Q1 84%, Q2 90%, and Q3 was 97%. Assigned portfolio stood at rupees 771 crores as on 31st December 2021. As on December 31st, 2021, 100% of our disbursements are made through cashless mode, while cashless collections stood at 4%. We at Satin aim to adopt and use more of digital channels as it largely mitigates cash risk and increasing operational efficiency. In this regard, we have also adopted website payment options and UPI auto debit. Net interest income for Q3 FY22 stood at rupees 194 crores as against rupees 164 crores in Q3 FY21. Our Q3 FY22 pre-provisioning operating profit stood at rupees 59 crores as compared to 52 crores in Q3 FY21. For the quarter ending 31st December 2021, we have made adequate on-book provisions of rupees 427 crores on account of COVID-19 pandemic and other external factors. PAT for the quarter stood at rupees 34 crores as against the loss of rupees 80 crores in Q3 FY21. Our cost to income ratio for the quarter stood at 69.6%, while our OPEX to GLP ratio stood at 7.4%, which is expected to come down gradually. Broadly on our collection efficiency, cumulative pan-India collection efficiency for Q3 FY22 stood at 97% without a SAM, whereas collection efficiency in top 4 states stood at 99%. 97% of our MFI customers were paid at least one installment at December 2021 as against 96% in September 2021. We are also witnessing consistent improvement in customers that have made full payment. 91% of our customers have paid in full as at December 2021 versus 76% in September 2021. We have a well-diversified customer base, well-penetrated branch network across states and 76% rural exposure. We've taken a number of proactive steps to improve portfolio quality and reduce portfolio stress. As of December 31st, 2021, our GNPA stood at 8.6% of our AUM, and we had made more than adequate provisioning of 8.1%. Our overall branch network counted 1,214 branches as of December 31st, 2021, making it one of the largest in the business. We use our physical branch network across India to reach more clients and help to the country's financial inclusion goals. Our branch network stretches approximately in 387 districts in 23 states and union territories. As of December 31st, 2021, 97.2% of our districts have less than 1% portfolio exposure. We have seen a significant reduction in our portfolio risk in terms of average exposure per district, 0.26% in Q3 FY22 versus 0.45% in FY17. Exposure of top 10 districts, 14% in Q3 FY22 versus 21% in FY17. Exposure of top 4 states contributes 51.5% in Q3 FY22 from 77.3% in FY17. Women account for a large portion of SCNL customers, with 75% hailing from the country's rural areas. By supporting business, our financing support helps underserved women in rural and semi-urban areas. We've been able to disburse close to rupees 29 crores under the product finance category, which includes loans for bicycles, solar lamps, home appliances, consumer durables, and water and sanitation over the years, while leveraging our idea of cross-selling products to these women. An update on our subsidiaries: business correspondent service under Tarashna Financial Services has reached an AUM of 676 crores. As of 31st December 2021, the company operates through 152 branches, has more than 3.4 lakh active loan clients. Satin Finserv, our MSME lending arm, has reached an AUM of 144 crores. Satin Housing Finance Limited has now reached an AUM of 275 crores, including DA of 22 crores, having presence across 4 states with 3,888 customers. The Satin Housing has 100% retail book, 71% affordable housing loans, and 29% of LAP. The company has 12 active lenders, including NHB Refinance, CRAR of 74.9%, and gearing of 1.x. The total equity stands at 100 crores. The board of directors of company's two wholly owned subsidiaries, Taraashna Financial Services Limited and Satin Creditcare Limited, at their respective meetings, considered and approved a draft scheme of arrangement for amalgamation of Taraashna Financial Services Transfer Company with Satin Creditcare Limited Transferee Company and their respective shareholders and creditors. The scheme under Section 230 to 232 of the Companies Act 2013. The company has filed the first joint motion application before the Honorable NCLT bench, Chandigarh, in January 22. Before we open the floor to questions and answers, I would want to emphasize that as a responsible firm, we are constantly working to improving the lives of our stakeholders by promoting financial inclusion. We are guided by our long-standing commitment to reaching out to society's underprivileged. We are well positioned to achieve development and reclaim lost ground in the next quarters, pushing by our utmost sincerity, compassion, and long-term goal of providing support where it is most needed. I would now like to open the floor for questions. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. Very good morning. So my first question is if you could indicate about our loan book growth for FY23 and FY24, and by when can we hit our pre-COVID quarterly disbursement numbers of around 1,900 crores?
The pickup has started during January. In fact, December, January, we were a little cautious in terms of the Omicron variant. But giving a growth numbers technically for FY23, we are looking at a 15 to 20% growth for FY23, and the disbursements have started picking up now. And hopefully, I think there is no more wave coming in, in further now. But we are now well capitalized as well as looking forward towards a growth of about 15 to 20% for FY23.
Okay, that's great. And also, sir, if you could give a credit cost outlook for FY23.
So on an overall level, we hopefully think that, the way we have actually put in our teams and we are looking at the complete system, it will be close to about 1.5%, 1 to 1.5% as a credit cost on a yearly basis.
Okay, that's great. And also, sir, if you could give a reason for our increase in OPEX for this quarter, and what would your outlook, best if you could quantify in cost to income basis?
On OPEX, our expenses are broadly under control, but because of the reduced volume, the percentages look high. If you see the number for 9 months, it's close to about 6.3%. The slightly increase in AUM, these will come to in the range of some 5.5 to 5.75% very soon, and then we'll work on further bringing it.
So we are working on it, and that's the reason why I mentioned in my opening remarks that we are looking at bringing it down gradually. Hopefully, everything is settled down in terms of our infrastructure, in terms of our human resources, in terms of the complete systems, as well as the way we are looking at growth now, since the third wave practically also looks now completely diminished. So it is very, very positively said that yes, the cost income ratios will definitely come down now.
Okay, and sir, the 427 crores on book provisions that you have specified is for standalone basis, right?
Yeah, that's standalone basis.
So what would be the console basis number?
So consolidated numbers are also there in the result. The other businesses, the MSME and housing, they make their own provision, but because as of today, major business is microfinance, so that number has been mentioned in the presentation. But if you see
3.9%.
But total of, I think it'll be close to about, I don't remember the exact, but it's close to about 490 odd crores.
Okay, that would be great. And so my last question is if you could provide any slippages data, for this quarter compared to whatever it was last quarter and what we used to do in pre-COVID.
Sorry,
can you give given this data, no? Comparative quarter.
We given the data. I think you can look at that basis. I think we've already shared that data.
I think stage 3 data was provided. We need like a slippages data. If you could just broadly comment on if your slippages were higher this quarter compared to your pre-COVID, or were they stable?
It's been stable. That's the reason why the GNPA is practically at the same level. It was 8.7, it's down to about 8.6. So it's practically on the same level. Not slipping. Yeah.
Okay, no problem. That will.
Yeah.
Thank you.
Thank you.
Thank you. The next question is on the line of Tejas Mehta from Omkara Capital. Please go ahead.
Hi. Thanks for taking my question and congrats on a fantastic set of numbers. Just a couple of questions. One is there's this new investor, Florin Tree Ventures, who have subscribed to your warrants last month. That is in the month of December. Could you just elaborate if there is any role that they are playing in running the ships from here?
Well, I probably am not the right person to give you a comment onto that, but yes, they are active, good investors with a good pedigree, and our sense is that any investor who comes on board definitely has some value addition to be made to the company, and this is what we are looking forward towards Florin Tree also, because the pedigree and the legacy is pretty good, and we look forward to their constructive approach towards the well-being and the value addition to the company, definitely, yes.
Great. The other question is your for the book that you have about 7,200 crores, I think your presence is very wide across the country. Probably that is one of the reasons why your OPEXs are also so high. Is there any thought process to consolidate the operations, rationalize the branch infrastructure, or any of those things?
See, I think, when we actually diversified, this was post demonetization, so at that point of time, and I can just give you a broad base, that our UP was about 50% of our total portfolio. Now, for us to do a diversification was like an impending thing to really, avoid any further crisis which could probably there. And this has probably served us also very well in terms of our, looking at this crisis across in the last few years as such. So we have actually no plans, but we are looking at growth, which will now happen because since our geography is so diversified, that for us to take a deep dive into all these existing geographies will give us maybe a far more easier reasons to actually grow now from here on.
Got it. And what would be your growth ambitions over the next couple of years? And how do you see the MFI cycle from this point onwards?
See, the MFI cycle still has a lot to deliver in terms of its reach. It is still not peaked up, as what a lot of people would really say, and this is what my forward-looking statement is, that it is still not peaked up. It still has another 10 to 15 years before it finally peaks up. So, in terms of our growth, we are looking at a 15 to 20% year next year. But I think my own sense is, if I can give a forward-looking statement to this, it could probably be in the same range for the next at least 4 to 5 years. This is what we are looking at.
A 15 to 20% kind of a run rate in AUM growth, right, is what you're thinking?
Right.
Okay. Got it. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Priyanka Singh from Aditya Securities. Please go ahead.
Yeah, good morning, sir. So first of all, have you faced any impact of COVID third wave, like any specific state that had been impacted? So your presentation indicated collection efficiency in Punjab, which has been relatively subpar. So what are the reasons for the same?
So I think, if you look at the third wave, technically for us, we took a preventive measure in terms of looking at it. The collection efficiency did hold up pretty well, and in fact, it is holding up even till now. Now it's on a decline. The third wave is practically on a decline. But the reason why we've had maybe a slight dip in the disbursement was because of we wanted to be very, very cautious in terms of how we really look at the disbursements for the December particular month as such. So December and January were, which was the effect of the third wave. Thankfully, the collection efficiency was in fact, better during these times, And looking at probably Punjab has an overhang, technically from the farmers' agitation, and there's been technically what would you call it overhang in terms of overdues which are still there. And however, looking at it, the collection efficiencies have increased from about 86% to now about in December to about 91% in January. So it's a slight uptick which is happening now across Southern, and we feel that in the next couple of months, 3 months, we'll be able to recoup back, whatever we've lost during the entire session of about 1.5 years of the pandemic, as well as the farmers' agitation which was there.
Okay. And are there any other states that are showing signs of delinquency due to third wave or any other reason?
No, there aren't any.
Okay. So going forward, what is our plan for the Assam portfolio? Like, are we looking to maintain the portfolio's share or reduce it further going forward?
It's already been reduced, and we're just waiting for the state government to. They've already distributed checks for the first category of borrowers. We are now waiting for the second category of borrowers to be paid the amount from the Assam government, and they are on course to probably do that. However, there's been a dip since the last 1.5, 2 years since all this crisis started in Assam. Our portfolio has already dipped from there. We started our disbursements on a very low key in Assam also, just to maintain and see how the ground covers. And in fact, we are very hopeful that the first time disbursements which have happened in Assam have held up pretty well, and this will now hold up. So we'll do it once this whole thing by the state government actually finishes off. Then we'll start our full-fledged disbursement from there. But right now, yes, there's been a slight dip in terms of the AUM which is there.
Okay. And lastly, what are your views on disbursement of new loans? How much is post-COVID?
Post-COVID, it's been significantly been less. Earlier what we used to have close to about 40 to 50% of our loans, which was new customers. Right now, I think it's in the range of about 24%. So I think we are just now catching up. Once the third wave is completely finished off, and which is right now with the declining numbers being shown now on a constant basis. I think this will come up to the levels which is pre-COVID to about 40-50%.
Got it. Thank you.
Thank you so much.
Thank you. The next question is from the line of Mahesh MB from Kotak Securities. Please go ahead.
Hey, good morning. I just had 2 questions. One, in terms of the borrowers that you have, in terms of their job availability or the kind of wages that they had pre-COVID and what they are generating today, if you could just kind of give us as to how that has progressed as we see in the last couple of months. And secondly, now that you've been speaking to the borrowers quite consistently, have they also taken a fair amount of debt outside the MFI to sustain their livelihood in the last 2 years? Thanks.
So, Mahesh, I think there has practically been not that a challenge in terms of the wages earned, as well as the monsoons giving us a good agri crop, as well as the other related factors which are there in the rural economy. There was that initial thing in the first wave of COVID, which did impact the borrowers to a certain extent, and that's the reason why this whole pool has really come up. And the second wave, which was far more harsher in terms of lockdowns as well as in terms of human lives. I think post that, it has been a slow and a cautious approach of coming back into the economic scenarios in the rural space. And now I can probably say that in terms of the income generating capacity of our borrowers, they are all now back to the pre-COVID levels as such. So that decline is not there anymore in terms of wages as well as the output of the agri economy as such, on a macro level. What was the other question, So
indebtedness, sir.
Overall borrowing outside.
I won't have an idea technically, whether they are borrowing from the other sources as such, because again, I think that distribution outreach, the reach which is being presented by banks, SFBs as well as the MFIs, I think it's very hard to replicate by any other, I will not be able to give you a comment on the unorganized sector because we don't have numbers which could justify and my take on that, but besides that, I don't think so that, there would be, borrowing from the other lenders besides the financial inclusion.
No, it was just a very, very general question in the sense that things on the ground was fairly challenging in the last 1 year. Did they had to resort to some form of indebtedness outside of the formal financial system that is there?
I really don't think so, because the credit bureau reports which we are getting up are still giving us practically the same amount of indebtedness which we used to see close to about a year back. Maybe that is a kind of an indicator which is there.
Perfect, sir. This is useful. Thanks.
Yeah, thanks.
Thank you. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good morning, sir. Sir, first question is, so your non-paying customers are 3% and I think the partially paying ones are like 6%. So that is 9% of the customers. And it has reduced over time. But on the ground, sir, any feedback that you're getting from these two categories as to what are the reasons behind continued non-repayment, and when can they start paying up to MFIs like you?
See, my own sense is that this drop, whatever has happened in terms of non-paying customers, I think could largely be an issue of maybe the income generation as well as maybe a forward-looking or maybe a blunt statement like of the intent issue. It could also possibly be there. The reasons of bringing it down probably also attributes towards the strong teams which we have put on the ground and the way we've been handling this crisis as such. And we feel that going forward also, I think we'll be able to. Let's see if we go forward by that, we'll be able to get, at least, our collection efficiency back on track, which are already on track as compared to the 4 top states, which we said about 99%. My sense is, I think, this could probably be the reasons why these non-paying customers are still there and the partial paying customers are there.
Even as it is, what happens is after crisis, the credit culture does dilute. So if you remember, 5 years before this industry used to have a credit cost of less than 50 bps, which gradually became 1%. And now, if you remember, in the earlier question, sir commented that it will be around 1.5%. So yes, there is a dilution in the overall credit discipline and culture also, and that has because of whatever economic downturn we've been facing.
Okay. And the other thing was, I think the spread caps which were supposed to be removed for the MFIs. So what is the timelines for that, and do you see that as resolving some of the problems for MFI industry as such?
Boss, if you all guys can actually tell the RBI to probably give it to us as fast as possible, it will be probably good, but we are also waiting for that. It's been some time, but going by the initial drafts which are there for the harmonization code, we feel that it is going to be a benefit for the MFI industry for sure, because if the margin caps are not there, it definitely gives us maybe some room to give and pass on whatever we want to pass and maybe have a risk-based pricing for ourselves also, rather than not having it right now. So our sense is that once it comes in, I think it will probably be far more positive to the MFI industry.
Understood, sir. Sir, any guidance on your overall gross NPA numbers? So now, I think last 2 quarters we have been around 8%. So what's the guidance for, let's say, the end of this year and end of next financial year?
The next, I can't give a GNPA because, there are so many moving parts to it, but probably done whatever we've done in terms of our provisioning and everything, and I think we should probably be good from here, That's the only thing which I can let you know, because that's what we are also sensing and feeling, across in terms of our numbers.
Understood. And some of your other subsidiaries, we have seen, much larger credit cost coming in this quarter. So what's happening on that front, and why?
So it was basically on a BC model, where BC was as exactly what the microfinance industry was facing. So BC is a replica for the microfinance industry, what we face in SCNL, the parent company. So that's the reason why it is there. The other two are probably, if you look at Satin Housing, it's just got a GNP of about 0.34%, which is far less than even the industry peers all across. And MSME is about 6%, which is again a slight overhang of this thing. They are also back to the collection efficiency of about 98% now.
And slight impact of the RBI circular.
RBI, sir.
On the MSME book.
On the MSME book, yeah.
Understood, sir. Thank you, sir, and all the best.
Thank you so much.
Thank you. We'll move on to the next question. That is on the line of Balkrishna Vakase from AXA Now Investment. Please go ahead.
Good morning, sir. Many congratulations for good performance in this quarter.
Thank you so much.
I have two questions. First is related to, how far we are from pre-COVID levels in terms of slippages, or is there any new normal wherein NPA will be substantially higher than pre-COVID level?
So I think we're right there now, knocking at the doors of pre-COVID levels, But if you look at maybe in entirety, I think it'll be FY23, I think, where we can look at maybe things to probably stabilize in the fullest form as such.
Okay. So is there any fundamental change in terms of what the average NPA levels? What it is used in comparison of what it used to be pre-COVID?
No, I think we're not giving any guidance on the NPA levels. We're just watching the situation. I think, as we've reiterated so many times, I think, we are now probably looking at the end cycle of, the impact of the crisis.
In spite of whatever cycles we saw, there is a 100 basis decline year on year in terms of the GNPA, and that too while we actually face two more waves. So yeah, things will be better with a growing base, etc., but no guidance as on date.
Okay. And my second question is related to Taraashna Financial Services. So basically, in the quarter 3, it has posted a pre-tax loss of 9.5 crore. So what I understand from the business model of Taraashna is that it is doing business correspondent services. So basically, we would be doing a lot of efforts on the ground to raise loans in this company. So isn't this, the whole purpose of adopting this business model is to avoid losses, or maybe to have very minimal losses in comparison of revenues? Okay. So, what is happening over there in terms of the credit costs and the losses that we are continuously posting?
See, Taraashna is a VC company, and the first loss guarantee which normally we give is about close to about 5%. In terms of if you look at the comparison between the parent company of SCNL and Taraashna, SCNL has probably got 100% provisioning to be done across over there. It is based on 5% first loss, which probably is given to the partners. So in terms of that, of such a crisis of a huge magnitude, we've been able to sort of settle ourselves with about a 10 crore loss. I think, speaks very well for the ground efforts which been put in by Taraashna in terms of getting the money back from across over there. But there had to be some loss after such a huge crisis which was there. So our sense is that I think, we've been able to curb it to this kind of a level, and going forward, I think, it'll be much better, And the other factor is once it gets merged with the SFL, which is going to happen in due course of time, I think the leverage of capital as well as the entire ecosystem of both the companies merging together with each other, I think it is going to throw up a far more positive as compared to Taraashna just being standalone, looking at just pure microfinance as a VC model.
Okay. And basically, so we have around 20 crores of revenue in quarter 3 in Tarashna, right? So, I mean, as you say that, okay, Tarashna would be sourcing loan for parents, right? So, I just want to confirm that this company is also raising loan for other, like IndusInd Bank or something like that, right?
Yeah, it is for both, for us also as well as for the others.
Okay. So, I mean, can you give me a rough idea, like how much of this 20 crore of revenue would be attributable to in-house sourcing and for the other people?
In-house is very negligible. I think it will be just about, maybe about 2 to 3%, at the maximum of that 20 crores.
Okay. So yeah. So basically, considering this, do you think there is risk-reward ratio in this business is not particularly in these times are not in our favor, because we are doing we are putting a lot of efforts in raising loans and still we are we have to bear a lot of losses.
Yeah, I told you, the FLDG is just about 5% of the first loss, as compared to what 100% we carry in SCNL. So that's a huge advantage, But, the magnitude of the crisis was so huge that the entire portfolio of whatever it was, was under down at dumps, if you really look at it, So out of that, if we come out with a loss of about 10 crores at the maximum, I think, is pretty heartwarming, to really look at it. That's what our statement is.
All right. That's all from my side. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Vibha Batra from Fair Connect. Please go ahead.
Yeah, thank you for taking my question. My question is on NPA movement. Can you give the gross slippages, recoveries for the quarter?
We mentioned earlier we are giving the GNPA number quarter on quarter, which is broadly consistent. Actually, has come down by roughly 1% in the last 12 months. Provision has been made, so this is what we have shared. So whatever slippages are happening means there are collections improve. So there's no additional slippages happening. Broadly, the NPA numbers are stable or coming down.
Okay. And have you taken effect of the changed RBI norms on NPA recognition?
On microfinance book, there is hardly any impact of that 12th November circular. There is roughly 1% increase in MSME gross NPA number because of that. And then housing NPA is just 0.34%, primarily because of that circular only.
Oh. And what would be your exposure in terms of equity and loans to Tarashna? And have you done mark-to-market on that exposure, since Tarashna has been reporting losses?
Mark-to-market, we do that. So mark-to-market is being done every reporting date for all the assets that we have. That is an ongoing process. So that we do on an ongoing basis.
So what is your total exposure, equity and loan?
So investment is about 85 odd crore, which is mentioned in our annual report also. There's some amount of debt offhand. I do not have the number, but we'll check.
Okay. Thank you and all the best.
Thank you. The next question is from the line of Riya Verma from Oracle Securities. Please go ahead.
Hi, sir. Thank you for this opportunity. I wanted to ask, what are our yields in the respective segments?
So yield, in microfinance, we have a 10% margin cap. So when we price our product, we keep that 10% margin while doing that, which is cost of fund plus 10% margin. We are broadly lending at 21.6 to 21.7% right now. This includes the cost of sub-debt, etc. also that we have raised in the past, and then some fixed cost funding. Means in housing, including LAP, the blended yield is close to about a little less than 15%, and MSME is broadly around 20 to 23%.
Okay. And when can we expect our margins to normalize? What kinds of operating margin numbers are we aiming at? Also, how do we see our NIM pan out in the next quarter and the next fiscal?
The NIM has improved. So on one side, the NIM has improved. There's a little bit of impact of overdues as on today on the yield because, generally in the sector, people don't charge interest for the delayed payments. Once that improves, the yields will automatically improve, which will have a result on NIM as well. So as on today, about 8.6% is gross NPA. The moment they will come down to acceptable level of, so the yield will automatically improve.
Okay.
So we work on 10% margin, so in reach there.
Thank you, sir. Got it.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for the closing comments.
Hi, good morning, everyone. I take this opportunity to thank everyone for joining this call, and I hope we were able to answer all of your questions. In case you have any more queries, you can contact us. My name is Aditi Singh. I head the strategy and IR for Satin, and alternatively, you can also get in touch with our IR advisors, Strategic Growth Advisors, SGA. And so stay safe, stay healthy. Thank you once again. Have a great day. Bye-bye.
Thank you. Ladies and gentlemen, on behalf of Satin Creditcare Network Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.